Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Monday, May 15th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you see here is basically a push higher after price pushed down into the May 3rd FOMC key level of our 23.8075s. Price pushed higher and continues to hold basically right on that 88.75. 88.75 has been our key level for some time, and we notice how prices traded above it, a little below it, and that's basically creating some sort of balance up here where price is just basically back and forth, back and forth. At the moment, right now, you can see the high of the day is right at the previous month's high. So bears are attempting to keep that area offered after these late bulls haven't really gotten paid. So bears are attempting to come in and seal that high right there for a shot at pushing this thing lower, perhaps into 23.76 and lower, 23.71s. However, overall, this 76.5 has been an area for bulls to defend. That's what I've been mentioning before. Even if price were to get down here, this is an opportunity for bulls to defend and swing the opposite way. This has been an overall uptrending market. Every time price pulls back, it's an opportunity to defend and squeeze. So right now, any bears that come in off this level have to get paid. If not, they become the fuel that will be used to squeeze to new highs. So key level right now to be watching is going to be that 94.95 for bears, and bulls are looking to keep anything into 76's bid at the moment. Anything pushed down into that area will be an opportunity to squeeze yet again. Overall, this has been an uptrending market, so the odds favor more strength ahead despite any pullback. But once price fails, I'll say this again, once price fails to hold 76.5 and we get a major close through it, it could be an opportunity to gun for 53s, 48s, and perhaps a little bit lower. But until that happens, bulls are going to be looking to defend that zone to squeeze. All right, let's take a look at the intraday time frame. On an intraday basis here, what you'll notice again, we have the push right here, double top into the highs at about 94.5. Price is pushed back to the previous week's close price of 89s, and that's currently bid. So we have kind of a two-way trade here on both sides of the range. At the moment, it's usually the best opportunity to fade both sides. So if price comes up to here, bears are going to be looking to fade back down. If price comes into 87s, it'd be an opportunity for bulls to fade it right back up. So right now it could be a fade new highs, fade new lows until further directional conviction reveals itself. Let's take a look here at crude oil. Crude oil has experienced a major overnight rally, and we've now reached into our targets, which was the 48.75 on the shallow end, and then we were looking for 49.77 and 50.20 on the high end. So after we had the major rejection day 2 Fridays ago, our idea was to look to defend pullbacks for a shot at squeezing into 48.75. That's this target right here. That's the midpoint of this impulse move. We had high conviction that that level would be tested. And even last Tuesday, what I mentioned pre-market was watch this low right here, because any failed new low could be the opportunity to slingshot it right into this target zone. And that's exactly what occurred. And again, failed new lows makes for some of the best trading in a directional market in an uptrending move. So that is exactly what played out. And again, it all started off of this rejection day. The absorption occurred off the right edge of that zone, and then from there we pushed right into that edge. What we were looking for was 48.75 and as high as 50.20, and we had very good targets that all pointed to that zone being defended and or targeted on the move up. Now, what we're looking for is to see how this thing continues, because this is quite a day up here, quite an overnight move. We'd likely look for some sort of balance to create itself up here. But as long as price remains basically above recent highs here, 48.40 or so, 48.35, any pullback into that zone could still be a buying opportunity for a continuation into 50.20. I wouldn't be looking too far past 50.20 yet, but we'll see how this thing continues to progress. But overall, very, very bullish move. So right here, 48.75, this was now reached right on this area right here, so we can mark that proper right there on the bar where it's tested, and now we have a completed key range that we can play off of. These boundaries are going to be very, very important now. I'll come in here and make that 48.75 right on the button. Now these are our key ranges, key levels. This is what we're looking for, the bottom, the midpoint, and the high up here, 53.75. These are the major levels to play off of, and once we see expansion from that range, we'll have key levels to target. For example, 63.75 is the 100% upside target. So if we were to break through these highs and continue higher, at some point we'd be targeting 63.75 based off that impulse move. Any failure would target lower levels as low as 33.75. So now we have big time levels to target both above and below price and within the range. And we're going to continue to follow this key range as we go along. On the intraday time frame, you'll see right here, big time push up overnight, nice bullish uptrending structure. Typically speaking, in an uptrending structure, you're looking to defend LVNs on the way up, pullbacks, etc., until you see a blow off top and a pullback. Then you start to see some sort of range develop, and we've already seen that materialize here. So it could be a fade new highs, fade new lows short term as this thing establishes a range. So I'd be cautious trading within the range, but I'd be looking to fade that new high into 49.50, perhaps back to 48.98. Any push into VWAP and just below could be an opportunity to fling it back up, and that could be the path here as we go along. Again, any pullback into this LVN, 48.30 to 48.40, is still a swing opportunity to defend for bulls for higher highs into 50.20. All right, lastly, let's take a look at gold futures. Gold also making a move up, and what we've seen here is price pushing into that 12.30 to 32 zone. That's been very, very important here. We're still in a downtrending price structure overall. The up move has not been super bullish, but it has been higher highs, higher lows, etc. You can see right here, 12.32, very, very important. And what I mentioned before was bears were looking to trap 12.30 to 32 for a shot at new lows into 12.05 to 1200. But acceptance beyond 32 starts to push to 42, and above 42 really opens the door to higher prices. Not quite sure we do that just yet. We got to see how this price behavior occurs around 12.32. What's going to happen? How's the market going to behave? At the moment, we have higher highs and higher lows. So this is a short-term uptrending market. But any failure to hold this area right here, which is about 25s, 25s, could be an opportunity to start looking at a downside run of the sell stop. So that's very important right now on both sides of today's range. And at the moment, not a whole lot to be gleaned from this price action just yet. I'm still of the opinion that there could still be one last dump into 1200 to 1205, but it all occurs upon a failure to see acceptance above 32s. On an intraday basis right now, you'll notice here, price trading above 32s again, but you can see offered, 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 and now we're above it again. R3 is right here. So again, it's very difficult for gold to see acceptance above 32 still, and that could lead to short-term rotations back to value, which currently is about 1230.6, and perhaps across the range into 28s. Any rotation across the range still an opportunity to bring it back up, and that starts into the 25s and 26s. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Monday.